Hi, good afternoon. Shenuri, I was actually waiting for your mock answers. Will you be sharing it anytime soon, or will you be needing time to share your answers? All right. Please do it by Monday, the latest, yeah. All right. Very good afternoon to all of you present here today. So we have physical audience, we have online audience, and then we have the YouTube audience. So I'd like to welcome all of you to the FR sessions. So we are fast approaching the FR exams in December. We are almost a month away from that. So today I'll be taking you all through some of the tips and techniques as to how you all need to, proceed from today onwards, heading up to your exams, right? We have exactly a month. So I'll be giving you all a 30-day planner as well, 30-day study planner, how you all need to work on it, what you all need to focus on, right? Special key tips there. And then there is we are going to split the question practice into MCQs. So we are going to do power 50 MCQs, meaning 50 solid MCQs covering the entire content of FR from Kaplan. So that's the material that we recommend using. And apart from that, we also will be looking at 2 past papers, hopefully, and a pre-mock. Right, so that's going to be the agenda for the next 4 weeks with FR. So today I'd like to take you all through a quick recap about what the syllabus areas are that were covered and what is assumed that you all have that knowledge of. So those who attended the live classes, we have covered everything, and those who are here only for the revision sessions, please make sure that the assumed knowledge is evident. All right. So let me quickly check the words. Right. So how do you feel about FR as of today? All right. Good payments are done. Yeah. Right. Hi, Zainab. Zainab, is this your reattempt, or is the first time you're attempting FR exams? Is the payment done? If you can just give me a little bit of an insight on that. Azmat and Shenuri, I assume that you all have made the payments as well. Azmat did attempt the mock that we had today as well. So the payments, I'm assuming, have been made. Zainab, a little bit of insight about where you stand as of today, because I have not seen you in the live classes. I'm assuming it's just for revision. So I just need to have an understanding whether you have a complete understanding of the entire FR syllabus, all the standards. All right. Okay, Zainab, noted. So I'm assuming that you have gathered the basic knowledge that is required to be gathered, because here we are going to touch upon very high level standard requirements. We're not going to go in depth because I'm assuming that you all know the depths of standards. Apart from that, we are going to look at the MCQs, and we'll be seeing the responses to those MCQs, the connection to the standards, and how the standards work. A little bit of insight on those standards that we'll be covering. So Power 50 is the MCQ set of MCQs that I have selected from Kaplan that covers the entire syllabus from content, requires a high level knowledge. So apart from that, doesn't mean that that 50 is sufficient for you all. But for revisions to be effective, I selected the 50 to cover the entire content, but you all will have to attempt Kaplan twice. I'll be giving you all the 30-day plan as well. Okay. Before we get into that, I'd like to take you all through a little bit of an overview of how FR syllabus areas have been. So you all can just have a recap as to what syllabus areas are and how we have completed, which areas are completed, what areas we are strong at. Then we'll be looking at what areas we need to make sure that we are strong in, if not, right? Okay, so syllabus area A1 was about the need for a conceptual framework and the characteristics of useful information, which touched upon different elements of the conceptual framework. You need to be very strong with that. Then recognition and measurement, again, a conceptual framework related aspect there. Then the regulatory framework, how the standard setting works, how the IFRS as an organization works, what are the organizations that are under it, how IASB works, ISSB works, how the interpretation committee, advisory committee, all of that comes under this area. Then the concepts and principles of groups and consolidated financial statements. So here we touched upon certain standards, for example, the IFRS 3, the IFRS 10, the IAS 28, to be very specific. We touched upon those standards under this. And we did discuss how the groups are different from single entities and what are the requirements for consolidation. Okay. Then syllabus area B is where major chunks of the standards are covered. So the B1 talks about tangible non-current asset, right? So here we had multiple standards within it, where this is, said to be the, give me a moment, right? So they is said to be the favorite area of examiners. Right? So meaning you all will have to be thorough with this and you'll have to be very clear with whatever the requirements of these standards under this area are. Okay. Then the intangible assets, so which is B2, again, a standard that's covered there. So there we look at the different elements of intangible assets, how the intangible assets work, internal generated intangible assets versus the purchase intangible assets, how that changes when it comes to group elements. That will be touching upon a 30-day plan. I don't want to go in depth yet. Then the impairment of assets, again, relevant to both the above areas, how the impairment works, when you're carrying amount and recoverable amount are two different amounts. So how that works. Then B4 speaks about inventories in agriculture, two standards combined there, IAS 2 and IAS 41. Then financial instruments, this is said to be the most technical area in FR, right? And a very important, again, there are a couple of areas that we have seen repeating in all the exam sittings, right? So tangible non-current asset is one of them. Impairment of assets is one of them. Then the financial instruments, leasing, taxation, the deferred tax component, the revenue recognition. So those are repetitive areas, standards that we have seen. And then the consolidation, the conceptual framework and interpretations. Earnings per share comes under, there is another area here, reporting financial performance. Okay, I'll be showing you all how the standards work. So there is a section over here. I'll be taking over there shortly. All right. Okay, and then we have leasing. Again, ROU versus lease liability, how that works, and then how the payments work in lease, the payment in arrears, payment in advance, and then the sale and lease back, the connection with IFRS 15. So those are the main critical areas there. Then provisions and events after the reporting period. Again, provisions is a very important area. So there, the onerous contract, the restructuring provisions, the environmental provisions, the dismantling provisions, all that is very important. How the present value works, when present value comes in, and how the contingent liability is disclosed in single entity, but in group it changes. So that's very important in this area. Then taxation, again, that's a complete standard that mainly focuses on the deferred tax and the current tax. So deferred tax could be an asset or liability, right? The conditions of the asset, how to record an asset, when to record an asset, right? And how the deferred tax liability works, right? That's what is important here. Then reporting financial performances is where other small standards go under, right? So here we have the changes in policy, the earnings per share, then we have the events after the reporting period, right? So there are events after is covenant provision. So there are a couple of standards that are covered here. Then the revenue, again, a very critical area. This is critical. I've given them in bold as well, critical, right? Revenue, the 5-step revenue recognition model, then how the transaction prices would work, how the allocation would work. So all that is looked at under revenue, and when to recognize the revenue based on contract assets, contract liabilities, some technical aspects there. Then B11 government grants, again, a component that we look at combining with tangible non-current assets. Again, an interesting area, but it's not a very critical area, but something that you all need to know. And foreign currency transactions is very small, a tiny area, but very important to remember the technicalities in this area as well. Then syllabus area C speaks about the limitation of financial statements, the interpretation, then the limitation of interpretations, then the not-for-profit and public sector entities, right? So when it comes to interpretation, the group interpretation, the single entity interpretation, then the cash flow interpretation, those are the three main interpretations that we are looking at here. Then syllabus area D is the preparation of single entity financial statements, how all the standards that we have looked at are going to impact here. And then the preparation of consolidated financial statements, how to prepare a consolidated statement of financial position, consolidated statement of profit or loss. Okay, that's what we are going to look at here. Okay, so here we look at where we'll be seeing most of these questions. Okay, so syllabus area A, C and D is going to form major part of section C of your exam paper. Okay. And when it comes to syllabus area B, section A and B is going to bring in as many areas that they can. Okay. Right. So when it comes to syllabus area A, section A and B, we need to have a thorough knowledge. But what is interesting about this is no questions are connected to the other question. So if you don't know an answer to one question, you can move on to the other one and you may know, right? If there is an area that you're not, you may be a little weaker at, so you can make educated guesses there and you can proceed on, guesswork works here. Then the weaker area does not intimidate you all, right? In section A and B. That's what is most interesting about FR paper. We'll be looking at the exam, the paper structure shortly as well. Okay, right. Then the exam, I've given an examination perspective. So we see in syllabus section C through notes in financial statement questions. So these standards can be covered through notes. So you will have to read the notes and understand how you are going to deal with these standards. So that's going to be how you'll see this in section C, right? Then section C again, section C of the syllabus is going to mainly form the single entity or consolidated financial statement interpretation. Cash flow again, not a very commonly tested area, but there is a chance, so you should be ready with that. Then when it comes to the single entity, you can expect the standards, the error adjustments, the financial transactions, the interpretation. Those are what you need to expect there. Then when it comes to the consolidation standards related to groups, adjustments, consideration eliminations relevant to a group, then how single entity financial statement relevant to group companies work and how the interpretation works. That's what we are going to look at under group, right? The standards that are covered here. So we have, how many standards do we have in FR as a whole? We just hide that for a moment. So tell me, how many standards do you all think FR has? Guys online, please feel free to respond. Just, y'all can make some educated guesses. We'll be looking at how educated guesses is going to be very important during the exams as well, right? So any guesses? How many standards do we have covered in FR? Anyone, any YouTube members or audience would like to take this opportunity to respond? Yeah. How many? Guess. Guys, y'all did a mock today. Yeah, can just give a guess number. Azmat, Shanuri, Zainab. What do you all think? How many standards do we have in FR? The key to understanding the entire FR structure is to remember the standards that are covered here, right? That's when you'll be able to face different face different sections of your exams. Yeah. Umar, a guess? No, not sure. Right, okay. Let's look at that. 24, very close. Anyone else wants to take the opportunity? 24 is very close. I've given a hint. 26. Right, let me share this on the Excel. Yeah, so we'll be doing MCQs today. It's better to use laptops, yes. You did not? It's better, but if you all do not actually have a laptop, it's okay. You all can, but you all are attempting some questions with me. Just open this. Yeah. Do you have the laptop? Yeah. Okay, keep the laptop open in that case. Sorry, guys, I just need to move it to Excel so we can interact with that better. Perfect. All right. So we just looked at how different areas work here. All right. Okay. Now talking about the exam structure, let's discuss a little bit about how the exam structure would work. Then we proceed into different areas. All right. Okay, so when it comes to the exam structure, there are 3 sections that we are going to see in the FR paper, right? FR paper is going to have a section A, section B, section C. All right. Now, section A is going to consist 15 objective test questions. Now, objective test questions is not a multiple choice question only. It can be multiple choice question. It can be a single answer question. It can be matching related question. It can be 2 option choice work questions. So it can take different methods, right? In terms of OTQs, there are going to be 15 OTQs that you'll be getting under section A, right? Every OTQ is going to be different to one another. There is no going to be, there isn't going to be any connection to any of the OTQs. So today, the Power 50 I've selected today is going to be section A OTQs and not section B. Section B will be doing only if time permits in the entire revision series. If time does not permit, I'll be giving you all what are the questions you'll need to focus on, right, to differentiate. But then again, you all have to complete the Kaplan twice. That's something that you'll need to remember. Okay, you all have good enough time to do that. So I'll be giving you tips how to do that as well. Okay. Then section B, there are going to be 3 cases, right? Now, each case is going to have 5 OTQs. Now, this is going to, now here you'll see some connections, right? So all the OTQs are going to be connected to your case that's given. So there are going to be 3 cases. So 5 OTQs per case is going to be questions that's going to be relevant to the case study that they've given. Okay, so you need to read the case, understand, and then respond to section B questions. Okay, so here we have section A carries 30 marks, section B carries 30 marks, and section C is going to be 220-mark constructed response questions. All right, so here you are going to type, right? You're going to use a practice platform and you'll need to practice typing because the exam you're going to use the CB platform to type. right? So here it's constructed response question, which will be covering preparation, interpretation, single entity group or group financial statements. Okay. So here one thing, one benefit you all are getting is the own figure rule benefit, right? So own figure rule benefit is something that you all need to remember will be playing a crucial role in getting you all a pass mark. Okay. If you all are at the, at the border, it's going to be the OFR, the own figure rule that may come to rescue. So don't worry about that. So what own figure rule does in section C is the main, if let's say there were one of the main figures that you had got was wrong, right? Now there are going to be subsequent requirements where you'll be using that figure, right? That's how it works. I mean, if that figure is wrong, technically it means everything is wrong. Yeah. So our own figure rule concept says is if it is wrong at the initial point, they will cut the marks. I mean, you will be not getting the marks there. But then for subsequent steps, if you are using the figure that you have used, although it's incorrect, if the steps you've done is correct, based on your own figure, you'll be getting marks. Okay. So if you're losing 1 mark or 2 marks, right? That's going to be for the wrong calculation, maybe that you did because you missed to notice certain elements of your financial statements. But the subsequent workings that you do, if you're using your own figure there, if you're following proper steps, you're not going to lose any marks there. So that's the benefit that the own figure rule is going to bring you. All right. Is that clear? Yeah. So study hub practice, you need to be doing, I mean, once that's, or, you understand things, you practice, but Kaplan, I would recommend to finish it twice, right? That's my recommendation. Okay. Why that's my recommendation? Because Kaplan has a lot of questions that may have been there in certain past papers, right? They choose past paper questions and they, make some adjustments to meet to the current or existing, requirements and give the questions. So it would be ideal to finish Kaplan twice. I'll be coming there. When I come there, we'll discuss on how, you structure questions and your study plan. Okay. So 2 into 20 marks questions would give you 40 marks. So in total, 100 marks is what we are looking at. How many of you all think out of 100 marks, taking 50 is difficult? How many of you all think taking 50 out of 100 is difficult? I believe it's not. If you take time to study. If you are not studying, if you're lazy, and then you go to the exam without any studies and you do the exam, that's your fault. That you had enough time, ample time to study. Even let's assume that you have still not started studying and you are starting the FR studies today, still you can pass with the 50 marks if you are committed enough. Okay, and if you follow the 30-day plan, okay, that we are going to look at next. Is that clear? How the exam structure works? Yeah. Right. Then comes the 30-day planner. Right. So here I've given day 1 to day 30, what you're supposed to do in order. Now here I'm even assuming that maybe you all have just started studying. So still you all can follow this and do a little bit of wider reading and get through. All right. Okay. So today is 3rd of November. All right. So this applies from tomorrow. Right. Tomorrow will be your day 1. Right? Continue up to day 30. Okay. So day 1, what you're supposed to do on day 1 is the IAS 16, right? IAS 16 and IAS 40. What are these standards? The property, plant, equipment, and investment property. Okay. Now, these very highly important. Now, weightage also I've given what is highly important, what is moderately important, what is not very important, but you all need to know. Okay. Now, what you need to mainly focus on here, I'm talking to the experts, assuming that you all already have a good knowledge about it. If you all are just the beginners, make sure you all go through the entire standards of IAS 16 and IAS 40, right? So those who are following a self-study routine, make sure you all follow ACCA Study Hub to refer to these standards and understand what the requirements are, okay? So what you need to do here, but before we go there, let me quickly bring you all the important technical advice, and then let's move into the subject, so standard related areas that you'll need to look at for every day, the next 30 days. All right. Okay. So first point that I would like to recommend or suggest to you all is read examiner reports after attempting each relevant past paper. How many of you all have, gone into the ACCA website and seen how the examiner reports work? Right? So examiner reports are going to be the comments perception of examiners on the relevant exam attempt. Right? This is what examiner reports are. What are they? The comments or perceptions of the examiner, the paper marker, right, about that particular exam. So what happens now? Let's say you are supposed to, now that's the point that I'm going to talk here, fifth point, which says attempt last 5 past papers, right? Now, when you attempt the past papers, attempt, not read, attempt. So even you all will make certain mistakes that would have been common during that exam session, right? So when you read the examiner report, soon after doing your or attempting those past paper, you will be able to understand what are the areas you went wrong at and how you will be or how you can improve on those particular areas. Okay, so that's the main purpose of examiner report, to understand the common mistakes, the common conception of the students for that exam setting, right? And we have examiner reports for at least the past 5 past papers. So please read examiner reports after, not before, after attempting each relevant past paper. You attempt a past paper, read the examiner report. Attempt past paper, read examiner report. Attempt past paper, read examiner report, right? So Zainab, in your case, this is extremely important for you to understand what could have been done better. And whoever is doing this exam, whoever is doing this as a reattempt exam, you all would have received a specific examiner report to y'all as well about how your performance has been, right? So make sure you read that and take that into consideration as well. Okay, then read ACCA technical articles. All these are available on the ACCA website. Okay, nothing is Greek here. All right, so read ACCA technical articles for FR, very important, all technical articles, and cover some articles from SBR. Now, this is going to be for your knowledge enhancement. When knowledge enhance, what happens? You will be able to interpret better, right? When it comes to financial statements, you will have a chance of interpreting it better when you have an enhanced knowledge. Okay? So ACCA has technical articles. Please make sure you all read it. But in the tips, I've given some of the technical articles that you all need to read somehow. Okay. Even SBR, I have given you all some. You all don't need to read everything, but whatever I've given in the tips, please read those technical articles and SBR as well. Okay. Then the next most important thing that you all have to start from today itself, whenever you all are practicing papers, whether it is Kaplan, whether it is the practice platform, whether it is from a book, from a past paper, whatever the exams you are looking at, attempt it on the CBE practice platform, right? Again, this is a resource provided by ACCA. You log into ACCA, my ACCA, you can get into the practice platform, right? Or even if you type on Google test reach ACCA practice platform, it will take you to a link of ACCA website. Click that link, then you can log into the practice platform, and there you'll have past papers, you'll have specimen exams, we all will have the pre-mock that we'll be discussing as well. Everything will be coming there, which you all can attempt on the practice platform itself. So make sure you all familiarize yourself with practice platform, because that is going to be key to your exams, right? To actual exam. Then specimen exam 1 and 2, again available on practice platform. This is also very important that you all do that. and attempt last 5 past papers. Right. Now tell me, 5 past papers, specimen exam 1 and 2, that's 2 papers. Then there is pre-mock. How many papers? 8 papers. Okay. So then attempt pre-December mock exam once released under exam conditions. Now the rest of the papers, maybe you all can take some, some conditions of the exam setup, but pre-December mock that will be released on practice platform, please make sure you all are attempting that under exam conditions. All right. 8 papers is what I'm recommending you all to do, but you all can do more as time permits, but there's a 30-day plan that I'm giving. So in 30 days, 8 is very crucial. So how you can split 8 also, I've given you all how you can cover that up. Right, then do wider reading and interpret 2 real companies' financial statements using the key ratios learned. Now, this is a tip that I would like to give to all the students that are attempting FR this time. Go to Google, type a company of your choice, of your liking, look at them. They all release annual reports. Look at their financial statements. Go back to your theory. You would have revised to interpretation theory, the key ratios. Apply that to the 2 real companies and see how you can interpret that company, the performance, whether they've been good or not, based on the ratios you've learned. You all don't need to be more advanced or, lesser. No, whatever you all have studied under FR, apply exact ratios and interpret 2 real companies. That's something that I would like to recommend. Again, there's something that's up to your choice, but my recommendation is to do that, right? Then comes the next important point, which is complete Kaplan revision kit entirely twice, not once, twice, right? Especially the MCQ area, right? How you're going to do that? Through a daily dosage of MCQs, right? So those who've been in my live classes, I've given them a little bit of an insight as to how daily dosage works. So how you'll be doing the daily dosage? Now we have 420 MCQs in Kaplan kit of 24-25. The latest Kaplan kit has 420 MCQs, right? So 30 MCQs in the morning, 30 MCQs in the evening, right? This is something you all have to combine with my 30-day plan. Whatever I've given, you revise that in between. Morning, you wake up, do 30 MCQs. Before sleep, before bed, do 30 MCQs, 60 MCQs. How much time does it take to do 30 MCQs? 1 to 1.5 hours, right? So how much time I'm asking you all to spare on MCQ dosage? 3 hours, right? 2.5 to 3 hours. Daily, you all have to spend on the daily dosage of MCQs, right? And then the rest of the areas also you can maybe give 2.5 hours, right? So expecting you all will be spending 5 to 6 hours of your schedule on the exam preparation for the next 30 days. Okay, so daily dosage, 30 in the morning, 30 in the evening, just open Kaplan, start doing that. So how many days will it take? 60 MCQs a day, 420 MCQs available. So in 7 days, you'll be able to complete the Kaplan, right? So that's how you break it into actionable goals or targets, right? The 7 days to complete 1 round of MCQs, second round, another 7 days. Second round, you can even increase the dosage, right? You do 40, 40, 50, 50 and finish it in 4 to 5 days. Okay. So target to finish Kaplan kit, especially the MCQ section twice, but section C, it's up to the speed that you're going to look at it, right? Then the final tip, this is not the final tip. I have one more tip apart from that, but in the list, I have not mentioned that. So watch the topic explainer videos under FR technical article section. Now, FR technical article section, you will find a lot of topic explainer videos. Those topic explainer videos are going to be very handy to just recap what you have studied, right? Because those are touching certain technical areas like financial instruments, the leases, you have the revenue, likewise the taxes, the deferred tax, all that they've covered through topic explainer. Please watch all the topic explainer videos. And then use Study Hub to your benefit as much as possible. Now there is no restriction, right? You'll use it as much as possible to revise, to recap, to look at the summary, to attempt the practice questions. For all that, please use the Study Hub. Right? Study Hub. But I'm assuming that by now you all would have use study hub to your benefits while the theory was happening. So these 30 days, you all cannot spend too much on theory, but for revision of theories. Okay, that's something I want to really mention. All right, is that clear, guys? Is that clear how the additional advice would help you all? Yeah. Right. If you all follow that, not 50, I'm sure all of you all can become, attempt for a world prize. Because PPIM has produced world prize. So you all can definitely target that. All right. So follow this, and definitely you all can even, eye for a local, country prize. Okay. Right. Now, how are we going to look at these 30 days? What are the areas that we are going to touch upon in the 30 days? So first day 1, which is tomorrow, IAS 16 and IAS 40. Do a revision on those two standards, but make sure what you all need to pay very specific attention to is, I've given you tips. Compare and contrast IAS 16 and IAS 40 revaluation versus fair value model, right? Then look at the disposal of PPE, which is key, and focus on how dismantling cost is going to impact your non-current asset cost as well as a liability. Right? When I tell that, you all need to be able to recall, right? Because that's something that you all might have found it difficult when we were doing theory, but I'm sure it's clear now. But again, these are the clear tips you all have to look at. Revise the theory, but this is something that you all have to be very specific about. For example, if we take, I'm just giving an example how you need to look at that. So IAS 16, IAS 40, right? Revaluation model, fair value model, right? So revaluation model requires you to revalue with sufficient regularity. But here it's going to be annually. You revalue annually, right? Here you are going to do subsequent depreciation, right? Based on remaining useful life, right? But here, no depreciation, right? There is no depreciation. Here, the revaluation gain through other comprehensive income, loss, P&L, unless it is reversing a previous gain of the same asset, right? Here, the gain or loss are going to be under profit and loss. Okay, that's just an example of how you are going to do a comparison between IAS. That's a tip I've given you. Does that make sense? Right? So when you look at now here, because there is a very high chance that the examiner might tell you sometimes IAS 16 is transferred to IAS 40, a property that you were using. Now you have chosen it to be used for rental, right? Or capital appreciation. So now you have to transfer it from IAS 16 to IAS 40. Or it can be vice versa, from IAS 40 to IAS 16. Now you decided whatever you gave on rent, you decided to use it. Now that becomes IAS 16. So when you're doing the transfer, this plays very important role, right? So please look at it. I'm not going to take you all through the theory. Yeah. Yeah, there is, right? So I'm not going to take you all through the theory, but that's a tip and a heads up I've given you all, right? Dismantling cost is going to be added to the non-current asset as well as liability. But what dismantling cost? It's going to be the present value, right? Not the actual, but the present value of the future dismantling cost that is expected. Now, present value calculation is very important wherever you see a significant period, meaning a period of more than 1 year, you try to do present value calculation there, right? Another tip here is there is 3-part technical article for property, plant, and equipment under FR technical article section. Please make sure you all read each of those 3 technical articles. That would clarify, and you all will be exam ready for PP section. Okay, so please read technical article on that. Is that clear? That's going to be your day 1. Is that too much? Not too much, right? How many hours are we looking at? Maybe 2 hours, right? So 1.5 hours MCQ. . hours MCQ. Then 1.5 hours evening MCQ dosage. So how many hours are we looking at in total? 5 hours. Day 1, 5 hours. More hours dependent on y'all. If y'all need to pay more, of course, y'all need to spend more time on studying. Those who want a world prize, please extend the timing from 5 hours to more. But this is going to be good enough for you all to at least come closer to 70 marks, right? So if you all spend 5 hours a day from tomorrow onwards. All right, is that clear? Right. Day 2. Now, these are mid-weightage. IAS 23 borrowing cost and IAS 20 government grants. Right? So IAS 23 borrowing cost, IAS 20 government grants. Now, at this point, whenever a standard number is read out, you should be able to recall what the standard is. Right? But I've given you all what the standards are. Now, here what you have to pay the main attention is, when it comes to IAS 23, the weighted average interest rate. Right? When to use weighted average interest rate, when to use specific interest rate. Right? That's something you have to pay attention on. And then you have to understand when to start, when to pause or hold capitalizing, and when to stop capitalizing. Okay. So those are the two, tips that would help you understand IAS 23 better. But apart from that, revise the entire standard. Okay. Pay close attention to this. IAS 20, again, revise the entire standard, but critically evaluate the impact of conditions failing to be met. Right? Conditions failing to be met for conditional grants and how the repayment would work. Right? So repayment is going to be in 2 sections. One, the repayment. Now, repayment is required in full when the conditions are not met, assuming, right? So there, but still, if it was a 5 years grant, at the end of 3rd year, if you decide that, you're not going to meet the conditions, you're going to pay all the entire grant. No, but there are 3 years that you've already recognized, right? And there's only 2 years based, that's on deferred income. So deferred income, you are going to reverse as it is, and then how you are going to deal with whatever you have expensed, right? How you are, or whatever you've recorded as income, how you're going to expense that. So that part, pay critical attention to, right? When conditions fail, how the repayment would do, because that's a very unusual area. Sometimes when examiner asks this question, you can get stuck there. Increase the value and depreciation adjustment needs to happen. Okay, so just pay close attention to that. Again, not taking you all through theory. These are the tips I'm taking you all through, because when the examiner asks you this question, don't be surprised. Because at this point, I've given you all, okay, this can be a potential question that you need to be ready for. Okay, right. So that's going to be day 2 with 30, the dosage of 30-30. Right, now this would take less than an hour. I mean, 1 hour, good enough for these 2 standards. Revision, understanding, and all that. This two is, 1 hour would be sufficient. And then 1.5 for 60 MCQs. So day 2, y'all be done in 4 hours, but y'all can spend more time on reading more technical articles and doing wider reading. Okay, that's day 2. Day 3, IAS 38, intangible assets. Okay. Now, intangible asset, again, it's a mid-weightage, not heavily tested, but section A, section B can have questions very frequently. Section C, not a very heavily tested, but this can be a question when it comes to a group. So there, how group level works, that we'll be looking at in a while. Okay. So key points that you need to remember is the clear designation of purchase versus internally generated goodwill, right? How the, good generated, not goodwill. It can be any intangible asset. So I've just mentioned goodwill, but please note it can be any intangible asset, right? Or goodwill. How the purchase versus internally generated work. Now, internally generated, you're not going to record, but purchase, you're going to record, right? And here you need to remember the criteria of capitalizing development cost, right? The pi rate, right? So when you are going to capitalize it, right? And when you are going to start depreciating it, so that you need to remember. Because capitalization happens when the pi rate criteria is satisfied. But depreciation starts only when it is available for use. So that's something that you'll need to remember, right? And how internally generated intangible asset of company may become a purchase intangible asset in terms of group accounts, right? Now, when you're internally generated, you can't record intangible asset. But when you're purchasing a subsidiary, that internally generator of that subsidiary would have not recorded. Why? The standard does not allow. But when you purchase that, that becomes an intangible asset that you have to record, meaning a fair value adjustment comes in there. Okay, so just pay close attention to these areas. Okay, so these are some of the areas that you might have not even thought about. Both, whatever is of your choice is good. Right now, I've given you all tips. Try to find where this is given in more detail, more depth. That's what you need to be particular about. Okay, right. Then there is a technical article here, which is intangible assets can't touch this, is the name of the technical article. Please read that technical article as well. Okay. So here you all will have to do a little bit of a revision on the group. Yeah, that requires you to, I mean, a reading time of 10 to 15 minutes, depending on the speed of reading. But 10 to 15 minutes, if you want to really apply and think practically, it might take 30 minutes, right? So that's the maximum you will be spending on each technical article. Okay, right. Then the day 4, high. So here you are focusing on 2 standards, IAS 36, impairment, and IFRS 5, non-current asset held for sale. Right? High, because examiners like to test this area, right? So here, what you need to pay close attention to in terms of IAS 36 and IFRS 5. So IAS 36 focus on indicators of impairment, could be external indicators, could be internal indicators. So pay close attention to the indicators of impairment. Then the annual impairment versus impairment only when the indicators are present. That also you need to look at. Again, I'm not taking all 2, 3, but I'm giving you a tip. When I tell that, you all should be able to recall, right? There are 3 items where you need to do annual impairment testing. There are the rest of them, you do impairment testing when the indicators are present, right? Then impairment reversal cap, right? Meaning when you're reversing an impairment, how much you can reverse it, but because you can never reverse the entire impairment loss, right? There's a impairment reversal cap. What is it? Depreciation, right? So you do both. So as if, the impairment never happened, impairment happened, the depreciation difference, so the cost difference there, that's the amount that you will be reversing. Okay, so just pay close attention to that. And the cash generating unit, again, pay close attention to that, because question can ask you the cash generating unit. Now they can give you certain items that are already in their market value. So whatever are in their market value, don't impair that, right? Let it remain as it is. Whatever is not at market value, impair that. And when it comes to impairment, they might give you certain say items of the CGU that are already worthless. So first you remove that, right? Then you remove goodwill. Then you allocate. Okay, that's the criteria you need to remember. So here I want you to read a technical article from SBR. So read impairment of goodwill. Technical article. Now, this is going to be for knowledge enhancement. Now, I'm particularly putting as knowledge enhancement because even if you all don't read it, it's fine, right? It's not going to make a huge difference. But if you read it, it's going to make a huge difference in your knowledge, in your understanding. Okay, so please, if time permits, read the impairment of goodwill technical articles under SBR. Then IFRS 5, focus on recognition and presentation. How IFRS 5 needs to be recognized, what are the criteria that needs to be met in order for, the asset to be held as non-current asset held for sale. Then how to present it as one line item. Then what is discontinued operations, how to do that, how to present it separately, right? So the conditions that need to be met and how there is going to be depreciation that's not going to be there once you hold it as sale and how you're going to show it in a current asset. So that's the general understanding of IFRS 5, which you need to go back, revise the theory and relook at this. Now, IFRS 5 related technical article is there on SBR. I have not asked you all to read it, but if you all feel like you all need a little bit more knowledge on this, please read. I think there is on SBR, right? So please read the technical article on this, right? If you all find it very difficult, right? All right. That's day 4, okay? But remember, the MCQ dosage 30-30 needs to be there every day. Then comes the 5th day. 5th day is going to be IAS 21, foreign currency, IAS 7, statement of cash flow. Now, this is low. Why the weightage is low? Because these are rarely tested, or even they're tested just 1 or 2 MCQs. So just, without spending days and hours on this, just spend good enough time to understand the standards and remember how this is going to impact the financial statements, right? So IAS 21, focus on functional versus presentation currency criteria. What makes it functional and what is presentation currency, and mechanics of translation, right? How do you translate the settled versus unsettled transactions, or monetary versus non-monetary items? How you're going to translate that. Now here there is a technical article under SPR again. IAS 21, does it need amending? Now this highlights the problems that IAS 21 has as a standard, okay? So here again, knowledge enhancement and to understand the problems with the standard. So you will be able to interpret the financial statement better. If let's say there is a single entity there where there is a foreign currency transaction, now that you'll be able to interpret better if you have an understanding of problems that IAS 21 has. Okay, please do that. Now IAS 7, evaluate operating, investing, and financing activities. Operating indirect method is what we are looking at under FR, but no indirect method is also good. And the basis of reconciling profits to cash by eliminating non-cash elements. How you are going to eliminate the non-cash income and non-cash expenses, and how you are going to take care of the working capital changes there. Then focus on how finance cost and dividends work in terms of own equity or liability, in which case it would be under financing activity, or when you have given loan to others, or you've purchased the equity of another entity, right? Your equity or your liability becomes financing activity. But if you have given loan to someone else, or if you purchase someone else's equity, that becomes an investment. That would be under investing activity. Any interest and finance cost there is going to be split against financing and investing activities. Then pay close attention to redeemable versus irredeemable preference shares and how that works as well. Okay. I think it's a little smaller, the font. Guys online, is the font clear to you all, or do you all feel like, I need to magnify a little bit? I'll be anyway sharing this file with you all. But do you all feel like, guys online, please confirm, do you all feel like the font is all right, or you all want me to magnify it and show it? I hope it's all right, yeah? Okay. Guys on YouTube, I hope you all are able to see it properly as well, yeah? All right, Shenuri. So I'll do the magnification then. Okay, so I'll take you all section by section in that case, right? Now that's your day 5. Do you all already feel that your 5 days have been very effective 5 days? Yeah, even without doing those 5 days, still you all might be feeling that, you all have had a very effective 5 days. So just imagine if you'll actually do that, how much of an enhancement you all will see from what your knowledge was to what it will become, right? Within this 30 days. Right, then day 6, we bring in a very important standard, which is IFRS 15. Again, a favorite area of the examiner. You see IFRS 15 in every exam setting, right? So again, a very high focus there. The revenue can be in the MCQ section, or it can even be a part of your single entity notes. Right, so contract asset, contract liability, how to recognize revenue, what components to be recognized, so all that you need to remember. Right, so here the tips that I would like to give you all is focus on key elements of 5-step model application, how you're going to apply the 5-step model. So here there's going to be principal versus agent clarification also. When you're principal, what you're going to record. When you're agent, how commission is what you're recording, not the entire revenue. Right, remember that. And then to understand the performance obligation and the revenue component for commission versus full revenue. Then the variable consideration versus financing versus consideration payable when determining transaction price. When it comes to transaction price, there could be certain variable considerations, or there could be certain financing element there, or there could be some payable to the customer that you have. So how the transaction price is going to vary according to that, right? And then consider how discount would be applied when looking at allocation of transaction price, right? When you're allocating transaction price, how the discount is going to impact the transaction price, which components is the discount going to impact, right? and satisfaction of performance obligations, whether is it going to happen at a point in time or whether it's going to happen over time. Okay. Then you need to understand the consignment inventory, the repurchase agreement, and bill and hold arrangement. These are specific areas. Revenue recognition principle for contracts over time, right? When outcome is profit or it is loss or it's unknown, there is four-step approach that we've seen there, right? So outcome is profit, outcome is loss, outcome is unknown. The contract asset versus contract liability, how that works. No, calculation. There could be calculations on this, but knowing theory is good, right? If at all, theory might be a part of a MCQ, not a main question where you have to write, but better to know, no? Knowing theory is good there. I don't think they will be going to, they have not gone to the extent of giving, complicated question of that nature, but knowing is always good, right? So I've given it here, so y'all can at least just don't spend too much time there, but try some time to, understand. If y'all feel like it's going above your head, just forget it. Okay, that's what my recommendation is. Right, the contract asset, contract liabilities using four-step approach, how the SFP and SPL is going to be impacted, and how the IAS 37 connection is there. Right, so onerous contract, you see in IAS 37 also provisions. Right, so just look at the onerous contract, how IFRS 15, IAS 37, how that's connected to both. Right, then sale and lease back. Again, I've given the connections with other IFRS standards. So it is connected to IFRS 16. Right? So there is IFRS 16 connection for sale and leaseback. So look at what the IFRS 16 connection is and how you are going to deal with sale and leaseback. So there I have given some in-depth understanding of sale and leaseback under IFRS 16 sections. We'll be looking at that shortly. Then read technical articles under FR and SBR for knowledge. There is revenue revisited, one article in FR and two section article in SBR. Read both. SBR if time permits, not forcefully, but reading SBR is going to give you all an edge in the interpretation. Please do read both of those technical articles. All right. Dosage of the 60 questions remains as it is. 30 more MCQ in the morning, 30 in the evening. Who? On which questions? Yeah. When it comes to the financial statements. Yeah, so if there is things like that where you have sale and lease back, so there you have to show why it was sale and lease back. How did you decide whether it's for sale and lease back? What are components? No, they not necessarily, but a world price answer would give. Okay, so not necessary again. Fulfill the requirements. What they are going to mainly test in terms of writing is going to be the interpretation, right? There's not going to preparing financial statement is going to be there. So you'll be preparing and workings. That's what you'll be doing. But in terms of writing, mainly it's going to be interpretation. So focus on interpretation better, right? Practice that. All right. Interpretation under section C. Okay. And earnings, remember earnings per share, which is IAS 33 standard, is also part of interpretation. We looked at the investor ratios. So under that, we have EPS. So you need to remember the EPS components when you are interpreting from investor perspective. We'll be showing it we'll be presenting in the financial statements. But don't overcomplicate that. Standard requirements, we do that we show it on. If you feel like you have certain time, do a little bit of reading on that, and then I'll guide you, because if you get into that, you will go crazy, right? So what you do is remember IAS 33 as it is, whatever the requirement is, but statement of financial position, how it's recorded, what is recorded, what is not, don't pay too much attention on that. That's what I would recommend. Just if out of curiosity, just do a little bit of a reading there. All right. Okay. IAS 32 or IFRS 9, again, a very important standard. There is also one more standard that's under financial instruments, which is IFRS 7. Right? IFRS 7. Now, these three standards are going to look at different elements of financial instruments, right? Azmat, I hope you're listening to me. I thought you'll be here, right? So financial instruments, guys, is very, very important. And this is a very technical area. And you all need to be very clear about this area. So what do we have in financial instruments when it comes to FR? Remember, there is going to be either financial asset or financial liability, right? There's financial asset, there's financial liability, right? Financial asset could be of two types: investment in debt, investment in equity, right? And then the recognition debt can be in three ways, where it can be amortized cost, fair value through other comprehensive income, or fair value through profit or loss. When it comes to equity, there's going to be only FVOCI and FVPL. When it comes to debt instruments, again, there are going to be two tests, which is contractual cash flow test, and then there is going to be the business model test, right? Okay, so FVPL is by default for either of this category, right? And each of this would have a transaction cost component. So I'm just giving a summary of this standard because it's very important. Transaction cost component, where in case of financial asset, you are going to capitalize except when FVPL, right? In terms of FVPL, you are going to expense it. And capitalize meaning you add to the value of the financial asset. But if you take the financial liability on the other side, that we are going to look at the recognition only through amortized cost. We are going to use the amortized cost table. Although FVPL is allowed here, we are not going to touch upon that. That is a SBR area. But a financial liability, everything is going to be through amortized cost. So here, again, the transaction cost needs to be deducted from the financial liability value. Okay? That's important. And financial liability, there's going to be compound instrument, which will be split under equity and liability. That's a summary of the financial instruments. Okay, I hope you all are able to recall this. Although I told you I'm not going to touch upon the theory. I'm just giving you some high-level summaries. Okay, right. So what you need to do here, those who have attended my live class, yeah, right. So this is what it's going to be more or less. You'll see something around this section only. Okay, so you need to be very clear about that. Now here, those who have attended my live class, I've already given you all a clarification as to why amortized cost table is used. When it comes to amortized cost table, we use it for financial liability and we use it for debt instrument investment in terms of financial assets. Why do we use amortized cost table? That's a question for you to think about and do a little bit of research on. Those who have been my students, they know what this is, right? Then recognition and derecognition criteria for both financial assets and financial liabilities. So instruments will be asset for one company, liability for other company. That is how the financial instruments work. Then subsequent measurement of financial liability, right? In terms of compound, especially where you'll be using the amortized cost table. Then you should be very clear about the effective rate versus nominal rate, right? So here there is going to be, when you take the effective rate, that is what is going to be your interest expense actually. But the normal coupon rate is what the payment is going to be based on, right? So there you need to understand the expense versus the liability changes, how the liabilities increase, right? How the amortized cost table and increases the liability. Equity is going to be unchanged, right? Whatever the difference was between the actual value and the present value of the future cash flow, which was a liability component, will be your equity, and that will remain as equity throughout. There is no change there for the purpose of your exams, right? But practically it's different, right? So practical, don't even think of getting into the practical elements at this point. After your exams, you can, try to look at every standard from practical perspective, right? Understood, Azmat. Right. Then financial assets, you need to remember investment in equity instruments versus investment in debt instruments, why amortized cost table is used in debt instruments, but not in equity instruments. Do a little bit of research there. Subsequent measurement through FVOCI or FVPL, two test methods in debt instrument, but not in equity instruments. Why CCF and business model test is not there in equity, but in debt? Do a little bit of research there. For equity FVOCI, what's the conditions when it comes to equity? There should be an irrevocable choice, and you need to hold it. I mean, you should not be used for trading. Those are two conditions for you to do it under FVOCI. Otherwise, by default, it's FVPL. If you're using to trade, FVPL. You should not be holding it for trading, meaning you have to hold it for maturity. That should be one condition. And there should be irrevocable choice made at the acquisition itself that you are going to record under FVOCI, right? Then how the gains are going to be different. So when it comes to gains, you have to work on the amortized cost table as well as FVOCI, and the interest and payments is going to be based on the amortized cost table, but gains is going to be based on the FVOCI, FVPL. So remember to use two tables always when you all are working on this. Yeah, gain and loss. But again, the fair value is what will be taking as the fair value as the opening. But the gain and loss will change accordingly. But for interest and the coupon, I mean, payment calculation, you have to use the actual values, actual amortized cost table. Okay, that's something that you all need to clarify again. That's why it won't change. But fair value changes now. Now, for example, the fair value at the end of the year one will be the opening fair value. No? But for coupon rate, you are going to use the previous fair value itself. And for interest, the previous fair value. So you'll always work with two tables when it comes to FVOCI. Yes, that's going to change. So, I mean, for gain and loss need to be accurate. No? So if you do it based on the new fair value only, you will know how much is the actual gain. But if you do the interest effective rate nominal rate at this fair value, the new fair value, that's wrong. That will have to be the actual value, right? So don't overcomplicate again. Those who've been in my live classes, I've given you all that differentiation, how to use two tables. Please go back and watch that particular recording. I would recommend you all to rewatch the financial instruments classes. I clearly showed you all how to do two tables and all that. So please go back and watch that recording. All right. So don't worry about that. Then FVOCI will be reclassified to FVPL when disposed in terms of debt instruments, right? But in equity instruments, it will not be reclassified. Why is that? Right? In terms of equity, you are going to do a transfer, reserve transfer. But in terms of debt, you are going to reclassify. Why is that? Again, understanding OCI is also very important for that. OCI is given in depth in SBR level, but there is a technical article on OCI. If time permits, read that, not required, and try to see why we actually use OCI and why is IASB itself confused of OCI, because IASB also does not know why they have introduced OCI sometimes, right? So even they are confused. So they are also saying when the standard requires you to use OCI, right? So to give more reliable information on FVPL only, we are using FVOCI to park it somewhere. That's the purpose of OCI. So just read the technical article, a very interesting technical article. But if you don't understand it, don't break your head, just forget it. And at SBR level, do a little bit of an understanding of OCI. Okay. And then transaction cost capitalization versus expensing, right? So you're going to capitalize, except when it's FVPL, amortized cost, or OCI, both you're going to capitalize the transaction cost. Then the ECL model, which is the loss allowance, expected credit loss model, 12 months versus lifetime and provision matrix. Now, this is there in Study Hub, right? Not in Kaplan. So if you're ECL model, right? So if you want to get some idea about ECL, just yeah, that's why just Study Hub, refer to Study Hub section for ECL model. But again, this is a very tiny area, not going to be tested at FR level in depth, but SBR level is where SBR level is where you'll see this in detail. So right now, just knowing what ECL model is would be sufficient, and what 12 months is versus expected credit loss model. Okay, right. Now here you have to read the financial instruments technical articles under FR. There's one technical article. In SBR, there are a couple of technical articles. So IFRS 9, there is part 1 and part 2. Impairment of financial assets, which is ECL model clarified for knowledge enhancement, right? Even if Study Hub and this technical article would give you what ECL model is. a good understanding there. And when does debt seem to be equity? This talks about compound instruments. So compound instruments are clarified better here. So please make sure we all spend some time on reading. Now, this day is going to be a heavy day. 7th day, we are expecting that 1.5, 1.5 for the usual dosage of 60 questions. Apart from that, you all will have to spend a good 4 hours. Okay. So in total, 7 hours. Whatever hours you all maybe have saved on day 2, day 3, low weightage one, spend on this. Very critical area. And that's why I told you this is the most technical area in FR. So please be very clear about all that. That's why I've given you all in the tip what you all need to focus on as well. So even if you all have not, you all will be able to. Even if you all have not attended my live classes, you all will be able to do a little bit of a reading and understand this better. All right. Right, then comes the next most important. Day 8 is going to be one more important day where we are, you all will be required to. Yeah, media, but again, SBR level is where it's going to be tested heavily. If you feel confused about the media list, don't break your head. Just absorb what comes to your head and don't let too much, because if at all there comes a question, it's going to be just a 2-mark question, right? So you can't take an opportunity cost where you spend more time here by giving up more time on others, right? So even if you have even if there is a mid-year question, which is not very commonly questioned, please make sure you skip that question or make educated guesses, right? You just understand what that is and make educated guesses. That's what I would recommend. So that you need to actually understand a mid-year, it's like this, mid-year, 2 interests are what is going to form 1 year in 1 year. So 6 months of the previous year's interest, 6 months of this year's interest. So that is how you are going to take the mid-year leases interest figure. 6 months of the previous, the 6 months, right? So previous years, now that's going to be an annual interest payment, 6 months of that and 6 months of the next cycle or next fair value. So that is the main understanding you need to have. Apart from that, the non-current liability, current liability element again is also going to be, you apply common sense, current liability, anything that you're supposed to pay within the next 1 year, non-current liability beyond 1. In terms of section C, yes. Workings correctly, final answer, own figure. So step by step, you might get some marks there, but don't break your head too much on that. But if at all break your head on in payment in arrears versus payment in advance. Okay, that you need to be very clear about. Okay. Focus on ROU as an lease liability, interest expense versus interest payment, right? So both are going to be different rates, effective rate for interest expense and coupon rate for, now in this case, it's not going to be coupon rate, but here they'll give you a percentage of payment, right? Depreciation of ROU, what's going to be the period that we'll be using? So it's dependent on whether you are going to get the ownership at the end or not. If you're going to get the ownership, it's going to be at the useful life. If you're not going to get the ownership, then it's going to be shorter of useful life and the lease term, right? So remember that. Then changes in lease liability, how the lease liability is going to change and what component goes on the current, what goes on non-current liability, right? And then payment in arrears versus payment in advance. That I have not given here, but please make a note. Payment versus payment in advance. So guys, remember, wherever you all get stuck, go back to the basics, which is conceptual framework. If you all get, now for example, the mid-year, if you get stuck there, go back to the conceptual framework. What does the liability say? What is going to be current? What is going to be non-current? Interest, what am I supposed to record in interest? What am I supposed to record in the financial, the statement of financial performance of profit or loss? So always think from that perspective. Now, even if you take leases, if they ask you what will be the expense in the fire statement of profit or loss, you can't just focus on interest. You'll have to also focus on depreciation. ROU asset is also there. You can't be forgetting that and give on options will have that also. Option will give only the least, the least liability or interest only of it also will be there in the options. And there will be an option for depreciation only. So even if you're confused, you've missed and only taken interest, still you'll feel, my answer is right because you see an answer there. Always remember all the components of P&L needs to be there, depreciation plus the interest finance costs. So please be very cautious when it comes to MCQs. Don't be overconfident, right? Be well prepared and know what will go and how things need to be recorded. Right. I'm actually speaking it here, how to answer. So when we come there, I'll show you how the allocation would work, time allocation. Okay. So I'm trying to spend today's day to give you all a lot of high level insights into how to face the FR paper. Then we are getting into now the power 50, at least we'll do 25 questions today, right? And 25 questions next week, and then the questions. So from next week on, it's question class. Today is where you all will get all the understanding as to how to prepare. So you all can even do this 30-day plan. Next week you all come, you all will already be done with 7-day plan, right? So until which point you all be done? You'll be done until IA financial instruments. You all be very clear, very thorough with financial instruments. Okay. So we always look at it from that perspective, right? So IFRS 16, then comes sale and lease back, right? So the connection with IFRS 15, what is the connection? How to account for ROU asset and lease liability in the context of sale and lease back, right? Alongside profit on disposal. Now here the key tip I need to give you all is remember the formula. There are two formulas, right? Where you'll be using fair value, you'll be using retained components. So all that formula is what you need to remember, right? And then read the technical articles under FR. There's a technical article that says IFRS 16. Leases, read that. Okay. Right. 8 days, 8 very effective days. Yeah. Done. Any questions so far? Any questions so far? Any areas that you all feel are not touched? Or you all feel are key areas? Because I've touched upon all the key areas. The mid-year. Okay, I don't find it very important, which is why it's not here. Right? Okay, because don't break your heads on overcomplicated things because you might forego whatever is very important in that case, right? Because that's not going to be heavily tested. I have not given it here, but good to know. Okay, right. Then comes the day 9, where you'll be focusing on IAS 12. Again, this is examiner's favorite. Now, this you are going to find in your section C. Financial statements, right? Preparation of financial statements, right? Again, a highly important standard. So here you need to understand the concepts of deferred tax liabilities and assets very clearly. What is the deferred tax liability? What is the deferred tax asset? And how you can record deferred tax asset, right? There's a condition. You can't record everything of deferred tax asset, right? So remember, I'm not going to give you all again theory. I'm just giving you all some high-level insights. Please go back and do some readings on your own. I need to leave that autonomy.
But tax, will they show you opening deferred tax? Deferred tax part.
Yeah.
Because will they give opening deferred tax part?
They might. Most of the time they might. They don't give, you need to figure out how to play around. The figures are not given. Okay, that is what now opening deferred tax is required. Why? To look at the current tax impact, right? How the current tax, the changes or in deferred tax is going to impact the current tax.
The P&L pattern.
Yeah.
If that difference, we will get the.
Yeah. Okay. Right. Then comes IAS 12, still be an IAS 12, right? Then you need to look at the revaluation of PP. Now, this is the main deferred tax that we, main temporary difference that we're looking at. FR is the revaluation of asset, right? And that deferred tax component for any, gain is going to be under OCI, right? Even deferred tax will be recorded under OCI and not PNL, right? Then the unused tax losses. This is what is used for deferred tax asset. OCI, revaluation of PP. So any deferred tax impact to revaluation of PP is also OCI, and why? The revaluation gain goes to OCI. Tax impact also goes to OCI. Balance will go to P&L, retained earnings, right? not retained earnings, revaluation surplus on the equity. Okay, right. The unused tax losses is an important element of your deferred tax asset. Why? That's the condition. How far you can carry forward the unused tax losses. That's what this talks about. Okay. Then there is business combination aspect of deferred tax, right? So fair value adjustments. When you adjust fair value, there is going to be a difference between accounting profit and the taxable profit. Then the PURP based temporary difference is also going to be there. So that's just for you, for your knowledge. It's an SBR level element, but good to know. Read the technical articles of both FR and SBR pertaining to deferred tax to understand it better. Deferred tax, there are 2 technical articles you have to read from both FR and SBR. Is that clear? Is that clear? Right. Day 10. IAS 37. Now, again, important.
Temporary difference, one is taxable difference, other one difference.
Deductible difference. Right. So IAS 37 and IAS 10. 2 more standards you're covering on day 10. Again, a highly important area because IAS 37 is highly important. IAS 10, it can be an MCQ question, but IAS 37 the onerous contract is something that you need to be very particular about. The contract as a contract liability, the connection with IFRS 15, be very thorough with that. Asset. But there you are not supposed to, you can, I don't want to tell the theory out. Please do the research. Otherwise, if I tell the theory, there is nothing for you all to learn from that, right? So if you all do your own research, you all will understand it better, right? If you want, I can even tell you what the condition is, but I've given you in tips for you to go and do a little bit of research so you are more exam ready. Okay, that's my focus. Right. Then provisions using present value, right? The criteria, meaning, any provisions that you have to end up paying for a significant period of time, more than a year, that you have to take the present value. Then there's going to be unwinding cost there, right? Unwinding of discount is very important. And how the unwinding is going to impact the liability, because liability is going to increase with unwinding cost. And the unwinding cost, the other element would go under a statement of profit or loss, okay, as under finance cost. Then the restructuring provisions, how that works. Then in terms of group accounting, the requirement of recognizing contingent liability. Now, contingent liability, as a subsidiary, the standard says you can only disclose through notes if it is possible, right? But when you are acquiring a subsidiary, contingent liability now needs to be recorded as a liability. Okay, that element connection goes back to your consolidation. The fair value adjustment is necessary there, a negative fair value adjustment. Yeah, in this part, for example, the contingent liability, the fair value adjustments, where the PP fair value changes, the contingent liability can be intangible assets that was internally generated for the subsidiary, but for us it's purchased, so things like that are important. Okay. All right. Then comes the IAS 33, which is going to be your day 11, right? So earnings per share. No, sorry, we missed the IAS 10. So IAS 10, you focus on how to evaluate whether evidence was present or not. So you need to focus on how to figure out whether evidence was there, because entire adjusting, non-adjusting component comes in, or it is solely based upon the evidence being present. If evidence was present, then it becomes adjusting. If evidence not present, it's non-adjusting. So how do you figure out whether the evidence was present or not is what you need to focus on when it comes to IAS 10. Then comes day 11, IAS 33. It's mid, not high, not low, but mid, where you need to be prepared with it, right? So here, this can be a part of your interpretation as well. Interpretation, investor focus. Okay, investor focus. So here you are supposed to focus on diluted earnings per share. So dilution happens in 2 aspects. One is when there's convertible instruments or when there are share options, right? So in terms of convertible instruments, share. Yeah, see. So here you have to take the potential, the conversion options, and you have to consider EPS accordingly. And you need to understand when to use bonus fraction and how it varies in terms of bonus issue and rights issue. Bonus fraction in terms of bonus issue is going to be number of shares. In terms of rights issue, it's going to be a value. right? And how you can do inverse, how to do inverse, all that you need to look at, and how to evaluate the weighted average number of shares as well. Okay, that's the tips for you for day 11. Right. Then comes day 12. So here I have put 4 standards, again, a mid-level standards: IFRS 13, IAS 2, IAS 8, IAS 41. Right. Now just tell me, I mean, there's a question that I want to check whether you all have ever come across. The inventory value when it comes to consolidation versus when it comes to single entity. Do you know how the inventory is valued? When it comes to single entity, how is the inventory valued? Lower of cost and NRV. When you're consolidating, when you're buying a subsidiary, the inventory of subsidiary will have recorded at lower of cost to NRV. But you will have to record that inventory. You have to adjust that. That's a fair value adjustment, right? That you'll have to adjust that on basis of the replacement cost. How much can you sell that or replace that inventory? Okay. So lower of cost to NRV done by a subsidiary needs to be corrected. I mean, for purpose of consolidation, it's going to be the replacement cost and not lower of cost in NRV. Okay, that's what I have mentioned in the tip also. Okay, right. So mid level. So when it comes to IAS 8, focus on when and how retrospective requirement for change in policy can be ignored based on standard requirements. Right now, when it comes to changes in policies, retrospective adjustment, right, comparatives, go back and require as if it was always there. That's what you do, right? But there are exceptions, right? Standards can give you exceptions based on which you can ignore the retrospective criteria and do the prospective adjustment. Yeah. So when, since you've forgotten that part, I want you to read and review that. Okay. So when that happens, that is when you can't reasonably get the value of the past information. Particularly IAS 16's cost model being changed to revaluation model. That's a policy change. But the adjustment will not be retrospective. IAS 16 says do prospective adjustment. Why? Because you will not have reliable value marker, fair value at that point. Why? The market is already gone. You can't go back and decide what the past market values were, which is why the prospective adjustment. Right? And understand why it happens, then it will be clear when to do retrospective and when there is exclusion of retrospective. Okay. Then change in policy can be when the measurement recognition presentation change, MRP, versus how the change in estimate works, where you do the prospective adjustment. When it comes to errors, you do retrospective adjustments. Those are the focusing tips that you need to remember. Then IAS 41, biological assets versus agricultural produce, right? So agricultural produce, the connection with IAS 2, how it becomes part of inventory, right? Then the bearer plants, the connection with IAS 16, right? How, bearer plants are not, although they are living plants, they will be a PPE. And then the fair value change assessment, how we are going to do the fair value change. That's what you need to know in IAS 41. Okay. Is that clear? Right. So day 12 completed. Day 13, conceptual framework and interpretation. Now, why have I kept conceptual framework after all the standards? Not theory. Because conceptual framework is the base of all the standards. Whatever standards are created based on conceptual. If the standards are, you don't understand standard, you refer to conceptual framework to understand. Right? When the standard requires amendment, you refer to conceptual framework and propose amendment. When there are certain standards where certain things does not fit into that standard, you refer to conceptual framework to figure out which standard is going to be most applicable. So most important area is conceptual framework. And on day 13, you are also going to revise your interpretation theory, right? All the ratios that's there, the profitability, the liquidity, the gearing ratio, right? And then the investor ratio. So look at the theory of that aspect, the limitation of ratios, how to do root cause analysis of ratios, how to, figure out the root cause. We did that very recently, so you should be remembering that. right? So again, a highly important area, section C, interpretation is going to be there, going to be there, going to be there. So be very clear about that, right? So conceptual framework of 2018, be thorough with the entire conceptual framework and try to evaluate the relevance of conceptual framework with standards. When you, no, interpretation is going to be there. Cash flow can, interpretation of single entity, group, or interpretation of cash. Right? Interpretation can happen in three aspects. Group. Now, when it comes to single entity preparation, that's where you might see cash flow rarely. Right? So if they ask you, give you a single entity, maybe they can give you a cash flow statement at that point, but not interpretation. Interpretation will not be replaced. Interpretation is going to be there. Now, if your single entity preparation question is single entity, your interpretation would be group or a little bit of cash flow also. If your preparation was consolidation, the interpretation would be single entity. That's how single entity and consolidation both are going to be covered in your exams. Okay, remember that. Then you have to read the technical article, extreme makeover under FR and conceptual framework under SBR. So I've given you all the selective articles under SBR. Please do read all of those if time permits, right? So extreme makeover under FR and, the conceptual framework under SBR, right? Again, for knowledge enhancement. Then when it comes to interpretation, you need to focus on root cause analysis based on ratio formulas, right? If GP change, why did GP change? You go in depth. What affects GP? Revenue, cost of sales. Either change of revenue or cost of sales could have changed the GP. How can revenue change? Either when the selling price change or the number of units change, or with the sales mix changes. When it comes to cost of sales, how will cost of sales change? Either when the opening inventory changes, closing inventory valuation changes, or when the purchase value change. Why will purchase value change? Either when the purchase cost has increased or the purchase quantity has gone up or down. So that is a root cause analysis. What change for GP margin to change? Right? Just an example of how root cause analysis is done. Then group interpretation, pay special attention to intra-group loans, right? How intra-group loans is going to be at a concessionary loan interest percentage. Then sales and purchases, how the sales and purchases will be impacted and how that's going to impact your statement of financial position, statement of profit or loss, and how sales and purchases would have been eliminated, or if at all that happened, that would have happened at a lower value, right? If it was not group, then how that increase would happen. Because interpretation of group sometimes happens when you have to decide whether keeping a subsidiary is good or disposing it is better, right? So you have to look at the all these aspects. If we dispose, we won't have all these benefits that we are having, right? Sales at a lower price, loan at a lower interest rate. So all that will not be there. Everything will happen at the market rate. Is that okay, right? Or whether disposal is good or whether having the subsidiary is good. So you have to pay close attention to all this, right? Then the unrealized profits, right? Unrealized profit elimination happens only when it's group. If it is disposed, there's no unrealized profit. Then synergy, right? There would have been synergy where both the companies coming together would have been able to overperform, right? Then single entity. So you have to, in that case, look at the single entity performance and see what is performed better. If your subsidiary had performed better than you, then selling of subsidiary is going to be a loss to you, right? So always evaluate from that perspective. Then cash flow interpretation. For example, a negative cash flow in investing activities could be positive, actually positive, while positive cash flow in financing activities could actually be risky, right? So that's the example I've given. So just focus on interpretation very well and do a high level in-depth interpretation through the root cause analysis mechanism and having a wider reading. 20 marks question. Interpretation will be 20 marks question. Preparation of consoles for financial statement will be 20 marks question. Okay. So this is very, very high. Yeah. So day 13 is going to be very crucial. So spend a lot of time. Now, here also, I would recommend you all to spend around 7 hours on, with the MCQ dosage. All right. Okay, then we move to consolidation. Yeah, so we have 2 more days where we'll be looking at theories, then we start the practice, right? Anyway, practicing the MCQ dosage here, but I'm saying you're paying attention to theory also here, right? The revision. Right, then comes the consolidation. So day 14, focus on consolidated statement of financial position, very high again. So here the key tips that I want to give you all is 5 standard workings, remember that. Fair value adjustment, remember that, right? The group structure, the net assets of subsidiary, remember that, right? Then pre versus post acquisition, how that's going to impact the net assets of subsidiary, remember that. The goodwill can either be in cash, which could be an upfront payment, or a deferred consideration, or a contingent consideration. If it's deferred consideration, there's going to be liability, unwinding cost. Contingent consideration, there's going to be a change in contingent consideration, which would impact your liability, right? And that would impact your statement of profit or loss, okay, as an expense or whatever. Then non-cash consideration could be a share exchange, right? Then NCI, fair value versus percentage of net assets. Then group retained earnings. Those are the 5 workings you all need to focus on, or remember rather. Focus on fair value adjustments. So here you all need to focus on depreciating versus non-depreciating asset. Why? Non-current assets. So why? Because depreciating asset, there's going to be depreciation element as well. So your P&L is also going to impact. Why? Fair value adjusted depreciation is going to be the excess depreciation. Even the net assets of subsidiary will see fair value adjustment, but at the reporting date, there will be a depreciation element there for depreciable assets, right? Then the inventory value at acquisition. So IFRS 3 against IAS 2. IAS 2 is lower of cost than NRV, but when you are acquiring, you have to bring it at replacement cost. Assets and liabilities not included in subsidiary statement of financial position. For example, the internally generated intangible assets and contingent liability. How that's also going to change the fair value. Fair value adjustment is necessary there. Yeah, under the consolidation. And be particular about the elimination of intragroup transactions. What are the intragroup transactions? The PURP on inventory, PURP on non-current asset, right? How the transfer would work there, how the non-current asset value is going to change. Depends on what you find most convenient. Both are, I would say, equal. Why single entity can ask you all those complicated standards. Consolidation can have, but if you know the theory of everything, if you know the root or the basics, you are good. You can do anything. Okay. Then be particular about the loans, intercompany loans, receivables versus payables. Now here you have to pay close attention to cash versus goods in transit adjustment that we did. Then dividends versus interest adjustments. That's also necessary. Then CSPL adjustments in group retained earnings of CSFP. So in CSFP, how the CSPL related changes or impact is going to be shown? That's going to be shown under retained earnings. Consolidation. I think we did 2-3 classes. No, Azmat, we did 3, right? Azmat, you're listening to me, right? How many classes did we have for consolidation? I think we had 3 maximum. 2, yeah. 2 recordings. So I focus on CSFP, CSPL, but we did a lot of questions also. Right. So how many recordings have you watched already? Yeah, you were there. So 2 recordings is what you have to watch in that case. I've made everything very simplified. As I always reiterate, I always try to simplify it. Now, even if you look at this 30-day study planner, better, that's better, right? So when you look at now, even when you look at this 30-day planner, just you look at the tips and you would be able to get a lot of insights, right? So that's why the simplification is what I have always focused on, and my class is always about simplified way of teaching. Okay, right? So CSPL, be particular about full year versus mid-year acquisition. Why? Because here you will be prorating, or the accruing line by line. Usually they ask either CSFP or CSPL. They don't ask both, right? But if you're unlucky, if you are, I mean, again, how you take it. If you are very lucky, then you might get both.
If we got both, they will give easy information.
Yeah. And one more thing is, if they give both, now, if they give only CSFP, you have to do all the CSPL adjustments also under retained earnings, group retained earnings, right? The impact needs to anyway comes to group retained earnings. So, but mostly they give CSFP. That's what they mostly do. And they give all the CSPL adjustments within that, do on a group retained earnings. Yeah. So remember that. Right. And gain on bargain purchase, negative goodwill, just pay a little bit of attention there as well. Then focus on elimination of intragroup transactions. So CSP intragroup transactions would be the sales and purchases from your revenue and cost of sales. PURP on inventory would be added to your cost of sales. Profit on NCA transfer, right? Whatever profit on the transfer of the non-current asset between the parent and subsidiary, eliminate that. Depreciation adjustment that comes in, look at that. Then loans interest versus dividend income, again, pay close attention to that. Loan interest you have to eliminate, dividend income you have to eliminate. All these need to be eliminated. Then you need to take care of further CSPL adjustments, right? So what are the adjustments? Goodwill impairment. Goodwill impairment is going to be an expense in your CSPL. Excess depreciation for depreciating assets. Not internally. Purchase goodwill. Goodwill is always purchased, right? So when there's an impairment, that is going to be a part of your CSPL expense. Excess depreciation meaning a depreciating asset was fair value adjusted, then the depreciation that happens there is also going to impact CSPL, or amortization of fair value adjustment also going to impact the CSPL. Then the expense of professional fees that was incurred as a part of the acquisition, that professional fees also you're going to expense. You're not going to capitalize. Then unwinding interest cost on deferred consideration. When there's deferred consideration, then there's going to be unwinding cost in your CSPL. And when there's contingent consideration, the change in contingent consideration would also be there in your CSPL. There won't be your contingent consideration changes in your, the contingent consideration adjustment is not going to happen at the goodwill level. It's going to happen only at the CSPL level. And there is a period of assessment, 1 year assessment period where the changes can happen. Just focus on that as well. Okay. Then NCA working for profit attribution to parent and NCA is also very important, where you'll be taking the subsidiaries profit and you'll be allocating. Then there you have to pay close attention to who sold the inventory, whether it was subsidiary or parent. Subsidiary sells the inventory, then that profit is going to be relevant to both parent and NCI.
Changes comes on change in equity.
Income statement. Statement of profit or loss. Right? That's where the adjustment happens. Associate. Remember equity accounting and focus on signs of significant influence versus control. That's the theory, end of theory revision. And how many days will you all be taking for theory revisions? 15 good effective days. And those who are just starting to study, I mean, if you all have not studied FR at all, you all can extend this a little bit, by 5 more days, and you all can, try to study the entire theory, or maybe you all can allocate more hours and spend 15 days itself. Then day 16 to day 18, practice section C questions, consolidation related. Again, Kaplan is what is recommended at this point for this, but you can use days. Day number 16, day number 18, 16, 17, 3 days. 19, 20, 2 days for single entity section C questions. So here you need to spend around good 10 hours. Now from 16 day onwards, we are looking at around 9 to 10 hours of studies. Okay. So consolidation on 16, 17, 18. So 30 hours of consolidation, yeah, or at least 25 hours of practice. Day 19, day 20, single entity, 20 hours of single entity practice. Day 21, day 22, day 23, again around 30 hours of interpretation section C questions practice. Then on day 24, you will be attempting the pre-December mock under exam condition, because by day 23, you will be ready for the exam. Okay. So on day 24, you do the pre-December mock under exam conditions. Don't worry, still that's why I have kept all the past paper practice after pre-December. Right? So even if you don't get disappointed, if you get lower mark in pre-December, even if you get lower, don't worry. I have kept date 25, 26, 27, 28, 29, 30 for rectification of that. Right? That's why I did not bring the past paper practice above the pre-December mock. Otherwise, I could have asked you all to do all the past papers, then do pre-December mock. But at that point, if you get lower marks, then there is nothing that you all can, try to compensate it with. But if at all, I'm assuming after 23 days of rigorous studies, I am very sure that if you all follow this plan, I'm very sure you all are going to get very good marks. And if you all get very good marks at pre-December mock, meaning you all can get extremely good marks at their real exam. Okay, that's what I can assure you all about. But 23 days of rigorous revisions, rigorous practices, rigorous dosage of MCQs is definitely going to be sufficient enough for you to be exam ready. This I will be discussing. So I'll be discussing this on the absolutely last week. So last week is where I've kept the pre-December mock discussion. Okay, that's why I kept day 24 now. So if we are starting from tomorrow is 4th. So let's say when let's see when day 24 comes in. So day 24 is on 27th of November, and on 30th is the end of the month. So 1st of December is when we'll be discussing the pre-December mock, if at all, right? And that's going to be the last cherry on the cake discussion for you all to go into the exams with. Okay, so you all will be attempting the exam on 27th, and we'll be discussing this on the 1st. Okay, right. So even if you all, as I told you, even if you all take, even if you're not satisfied with the marks you all took at pre-December mock, don't worry. We have day 25 where we are starting the 2 past papers. Two past paper practice. Then you are reading relevant examiner reports. Then you are revising the standards relevant to the past paper questions. Whatever standards were tested in that past paper, you revise that standard. Okay. Day 26, again another 2 past papers, relevant examiner reports, revision of standards relevant to the past papers attempted. Meaning we are covering whatever we have revised in terms of standard here also, right? Day 27, specimen paper 1 and specimen paper 2. Attempt that. Then day 28, again 2 past papers, relevant examiner reports, revision of standards, relevant to past paper questions. So how many? 2, 4, 6, 8, 9. 9 papers is what I have given you all a plan of, right? Meaning 6 past papers, 1 mock, which is 7 important papers and 2 specimen papers. Okay, right. And then day 29, you revise theory, and on that day you watch all the topic explainer videos. Don't spend any other days for topic explainer videos. On day 29, because that's going to be a revision. Now you know everything. Now you're just watching that as a revision, and watch that at 1.5 speed maybe, right? Again, available on ACCA YouTube channel. So watch all the topic explainer videos on day 29, and day 30, practice more questions and wider reading. You can combine that on day 29 as well. So when will the 30th day be? No, 27th was the 24th day, 25th, 6th, 7th, 28th, 29th, 30th. 3rd of December is going to be the 30-day completion. So when is the exam? It's on 5th, right? You have
for 1:30.
So you have 1 more day. On 5th, right? 5th, 1:30. Okay. I'd always recommend a morning slot, because always. All right, better, then fine. But don't go to revise everything on that morning. That morning, keep your mind fresh and relaxed. Okay, right? Do you all find that 30-day study plan effective? What do you think, Umar? Effective, right? Right. So this is something that I want all of you to follow. Azmat, Shenuri, Zainab, what do you all think about this 30-day planner? Is that good enough, or you all need something more to be added? I don't think there's anything more to add. Covered everything in this 30-day planner. So whoever is even starting their studies from today, if they follow this 30-day planner, for sure, they can get through the exam with 50. Yeah, Azmat, Shenuri, Zainab, quick update. I hope you are listening to me. Any questions? Any questions? Oh, are we good? So that again, Asma, since you're doing two papers, it's dependent. Again, look at your schedule and fix it accordingly. And you can do the adjustment of this 30-day planner according to your schedules. Or maybe you can even look here, since you are doing two papers, focus on completing Kaplan once, right? For both the subjects. So there you see two. So the dosage, when you reduce it, again, there'll be time that you'll have saved, right? So likewise, you can do certain adjustments if you're doing more than one paper. All right. So this is focused on pure FR students and for students who are just starting their studies. And Azmat, I'm sure you have, you attended all the lectures also. So even if you make some adjustments here and there, it's all right. Okay. Right. So that was the 30 days planner. And now, before we proceed further, shall we take a quick break? Right. It is 4 p.m. Let's take a quick 15 minutes break and let's start again at 4:15 p.m. So you're going to look at the standards that are covered. Then there is IFRS summary of all the standards I have prepared for you all. So I'm not going to take you all through each of this. Maybe I'll share it with you all. So, just this table is going to help you all. Entire IFRS, all the IFRS standards are covered in a summary here. Right? So this table might help you all to remember things that I will not be taking you all through. Then there's going to be Kaplan Power 50 that we'll be starting today. Then the how to answer, exam success skills. Yeah. So after that, we'll be doing the questions. All right. So let's take a 15 minutes break and come back at 4:15. All right, guys. So coming back to the idea of how FR is going to consist of different elements, the exams rather. So when it comes to the standards that are covered under this subject, we have 26 standards to be very, very specific. All right. So we have IS 1 that we look at. Okay. Then we have IS 2 inventories, IS 7 statement of cash flows, IS 8 accounting policies, change in accounting estimates and errors. Then IS 10 events after reporting period, IS 12 income taxes, IS 16 property plant equipment, IS 20 government grants and assistance, IS 21 the foreign exchange rates, IS 23 borrowing costs, IS 28 associates and joint ventures, IS 32 the financial instruments presentation, IS 33 earnings per share, IS 36 impairment of assets, IS 37 provisions, contingent liabilities and contingent assets. Then we have intangible assets, IS 38, IS 40 investment property, IS 41 agriculture, IFRS 3 business combinations, IFRS 5 non-current assets held for sale and discontinued operations. Then IFRS 7 and IFRS 9 is financial instruments. 7 is disclosure based. IFRS 9 is the main standard. Then IFRS 10 consolidated financial statements. IFRS 13 fair value measurement. IFRS 15 revenue from contracts with customers, and IFRS 16 leases. So these are standards covered. How many standards? 26 standards. So these 26 standards, by the end of next 15 days or 15th day, you all should have, you all should be walking, talking standard knowledgeable people. Okay, that's what you all need to focus on. Then, as I told you, there are IFRS summaries I've given. So how the IFRS summaries work is there's objective. Always when you look at a standard, look at it from the perspective of objective. What's the objective of a standard? Try to understand that first. Then the definition, what are different definitions that are available inside that standard? Then recognition, the criteria, the subsequent. Then the measurement. Then the presentation, how you present it in your financial statements and what are the disclosures required. What are the different calculation methods if available, and what are the elements that make up the cost where relevant. Okay. For example, if we take IS 2 inventory, what's going to be the cost? PPE, what's going to be the cost, etc. Okay. Yeah, this covers all the standards of FR, which will be shared across in the LMS. I'll try to put it in the LMS. So let's see how I can share it across with you all. All right. Okay. And then Kaplan Power 20 is the number of questions that we have. 50 MCQ questions that we are going to focus on. So let's try to do at least 25 today. How to answer exam success skills. Let's keep that for next class. So let's dive into the Kaplan Power 50. These are the questions I've selected, and their standards that we're expecting to cover in the question. So today, let's try to cover up to IFRS 9, which is until question 106. Okay. All right, so let me share the question screen. Or let me move all the questions to the Excel. That would work better. Okay, when I'm moving it to Excel, it's cluttered. let's try to do it on the through the PDF. Excel is quite cluttered when I try to copy and paste all the questions on Excel. So Umar, there are 26 standards that we have. 26. We just looked at that. You might have watched a little bit of a recording. Right. Okay, guys. So let's start. Right. So there are 50 questions. As I told you all, I've selected 50 section A questions covering contents from different standards, right? Covers almost all the standards, the 50 questions, and they are all strong questions, right? Not very straightforward questions, something that requires you to think on your feet. Okay, right. So this is question number 2. So it's in the order of Kaplan question order. So question number 2 of Kaplan says, on 1st of July 20x4, experimenter opened a chemical reprocessing plant. The plant was due to be active for 5 years until 30th June 20x9, when it would be decommissioned. At 1st of July 20x4, the costs of decommissioning the plant were estimated to be 4 million in 5 years' time. Experimenter considers a discount rate of 12% is appropriate for the calculation of present value. And the discount factor at 12% for 5 years is 0.567. What is the total charge to statement of profit or loss? Okay, they are asking the total charge for statement of profit or loss. So what are the charges out of this that you all think will go on the statement of profit or loss? What do you all think? Let's move the chair away. So in this question, what are the elements that we are going to look at in statement of profit or loss? One, it's going to be what happens when there is discount rate? There is a present value calculation, right? So when present value calculation happens, what happens? Unwinding of discount, okay? So what they're saying is 4 million in 5 years' time. So you have to, let's use Excel as well. Let's do a split view with Excel. Just do the working here. Okay. Okay. So when you look at this question, what are the important figures here? They are saying it's 4 million, right? 4 million in 5 years' time. So you have to take the present value calculation. So they've given the discounting factor for 5 years, right? Fifth, what's the discounting factor? 0.567. So how do you arrive at the present value? 4 million into 0.567. So that is 2.268. Now that is going to be the value that you're going to capitalize in on current asset, as well as you'll be raising a liability. Okay, a dismantling cost liability, a provision. Okay. Now, what is going to be the unwinding cost here? What's the percentage? 12%, right? 12% is the effective interest rate. This into 0.12. 272.16. Is that all? It's finance cost. Is that all that you take? What else goes to your statement of profit and loss from this? When non-current assets is capitalized, depreciation comes in, right? So how is depreciation element going to be here? So what's going to be the depreciation? This is the cost that you has been capitalized, right? How are you going to depreciate this? How many years? 5 years. This is your depreciation. Or let's do depreciation also under this itself. 2.268 divided by 5 years. That's the depreciation. So what's the total? 725760. Do we have that option here? Option B. Okay. Question 2. Option B. What's the standard that's being covered here? IAS 16. Right? Question is pertaining to IAS 16. As well as what's the other standard connection here? IAS provisions 37. Okay. Remember that. Then we have the third question. Third question says, an entity purchased property for 6 million on 1st of July 20x3. The land element of the purchase was $1 million. Okay, now here the dates are also very important. Question 3. Right? Property. What's the price of the property? 6 million. Out of this property, what are the two elements under this property? There is land element and building. Land, building. Right? So land element they are saying is 1 million, right? 1 million. So what would be the building element? 6 million total property, land is 1 million, then building will be 5 million. Correct? So when was it? When was the purchase happened? 1st of July X3. Right? When is the year end? 30th of June, full year. Okay, so they're asking for 30th of June 20x7. So what are they asking? Building. Now here, out of land and building, will land be depreciated? No, land is a non-depreciable asset. So what will be depreciated? Building. What is the useful life of building? 50 years. Residual value is nil. So depreciation on straight line method. Straight line method depreciation is going to be cost minus residual value divided by useful life. No residual value. Therefore, cost of 5 million divided by useful life of 50 years. That's going to be the depreciation. Okay. Then they are saying that on 30th June 20x5, How many years? 20x3, 20x4. 2 years. After end of the second year, they are revaluing to 7 million. Revaluation happens after 7 years, right? First of June X4, or let's say, okay. What we'll do is let's change the formatting a little bit to make it more clearer. Land, building. If I zoom the question, I have to zoom it out a little bit. That's okay, no? If Excel is zoomed out a little bit. Is that okay? Works okay? Sure? Right. Right. Land, building, total. Right. This is a format that works best, right? 1 million building is 5 million, total is 6 million, right? This is as at 1st of June X3, right? Depreciation for the year. What's the depreciation? This divided by 50. What are the carrying amount? Amount carried down, how much is that? This is going to be 1 million. No depreciation. Land is going to be this minus depreciation. So what is the total? Still revaluation not occurred. Okay, still we are revaluation happening in 20x5. So we first need to figure out what was the value when the revaluation happened. Yeah. Okay, so that's what I'm coming at. Okay. Then there is another depreciation, right? Now this is our carrying amounts as at 31st of July X4. All right. Right. Then depreciation. Depreciation of, again, straight line. Same figure appears here. So what would be the carrying amount? Carrying amount as at X5. How much is that? This minus this, and this remains the same. Yeah. So what is the total cost? Total is 5.8. Now at this point, revaluation happens. Okay. Revalued amount. Right. So what are they saying? Total revaluation, it becomes 7 million, right? So out of that, what is the revaluation components? Property, 7 million. 1.24 is land, 5.76 is building. 1240 is land, 5760 is building. Okay. Now this is what the total is. Now that makes the total 7 million. Okay. On 30th June, meaning after 2 more years of revaluation. Okay. 2 more years of revaluation. What happened? The property was sold. Now we need to do the depreciation for the revalued amount. This is going to be depreciated over how many years? 50 years? No. 50 minus 2. 50 minus 2. 2 is already done. 120. So carrying amount as at 31st July X6, right, is going to be this minus this This remains same. Why it's not depreciating? Right, 6.8. Now there's going to be one more year of depreciation, right? Depreciation. Again, it's going to be remain the same, right? Same depreciation. That's going to be 120 divided by 48. 120. Carrying amount. Carrying amount as at X7. How much is that? This minus this and this. This plus this. 6760. Right. How much is the property sold for? Proceeds. How much? 6800. So what is going to be the gain? Do we have that option here? Option A. Right. Again, what's the reference? IA 16. Is that clear? Now, do you think doing this working is necessary in the exam, real exam? No. You can even do it without a working also. Now, why I'm doing this working? To show you all how this is done. But in an exam, you all need to know the shortcuts of doing it. Right? So in an exam, real exam, you do that. For example, you can, you just know the dates. Okay, 2 years, the initial depreciation, then 2 years revalue depreciation, then the disposal. So you should be able to do it in your heads. Okay? Is that clear? Clear? Right. Then the next question is question number 5. Now, this is going to be pertaining to government grants, IAS 20. On 1st of January 2021, Thai received $1 million from the local government on the condition that they employ at least 100 staff each year for the next 4 years. Due to an economic downturn and reduced consumer demand on 1st of January 2022, within a year, Thai no longer needed to employ any more staff and the conditions of the grant required full repayment. What should be recorded in the financial statements? Now the full repayments is required. Now here you have to evaluate what component was already recognized in the income and what remains unrecognized. Okay. Right. So that's the question number 5 of Kaplan, right? 4 years grant received 1 million. 1 million over 4 years. So how much is he going to release every year to the income? 250,000. So how much would he have released? 250,000 was released, right? What component was not released? 1 million minus this was not released. So what happens? This remains in under deferred income liability. So that you have to reverse, meaning you reduce the deferred income by 750. And then what do? You have to recognize now you have recognized an income of 250 now. So to reverse that, a loss of 250. Do we have that option here? Option B. Clear? Now this is what I was talking about when I spoke about IAS 20 in the planner, right? How the repayment works. Okay. So repayment, whatever has been recognized in statement of profit or loss needs to be not de-recognized, but if it was income that was recognized, you have to reverse that. You're reversing that meaning what? Expense. Expense meaning what? Loss. Right? You end up paying that.
Also, reduction in
loss. Because we've already recorded income, right? So when we recorded, we've already taken it for profit. We've shown it as a profit. So this year, next year financial statement of profit or loss only, you are adjusting it. Same year, you won't even record the income. Which happens the same year, even income will not be recorded. You see that from deferred income itself, you are going to eliminate. Okay, right. All right. The next question, question number 13. Right. Question number 13 says, what has happened here? Why is it blur? Hmm? It is not. Oh. Okay, fine. Okay, remember the fourth option is net income of 2 million, right? Fourth option is on next page, so let's remember that. Smiths & Co. purchased a new building with a 50-year life for 10 million on 1st of January 2023. On 30th June 2025, Smiths & Co. moved out of the building and rented it out to third parties on a short-term lease. Smiths & Co. uses the fair value model for investment properties. At 30th June 2025, the fair value of the property was 11 million, and at 31st December 2025, it was 11.5 million. Yes. So what happens here? IAS 16 to IAS 40. See, the questions also what I've selected are reflecting the tips of the study plan. Right. So when we do these questions, you'll already have covered most of the study plan related clarification, and you'll be able to clarify it better. Okay. Right. Now, what happens here? What do you think happens here when IAS 16 is transferred to IAS 40? What happens? Now, here also they are asking the impact on profit or loss. What are the impact that we're going to have? What did we look at? IAS 16. First, you have to revalue based on IAS 16. So there you'll be revaluing to 11 million, right? Right? 50 or 10 million, 50 year useful life on 1st of January 2023. 20x5, after 2 years, you are changing the value. So whatever the difference of, between 11 million and the carrying amount was, will be recognized through other comprehensive income. Will that impact profit or loss? No. Why? IAS 16 revaluation surplus goes under other comprehensive income. That has no impact on your profit or loss. Then 11 million becomes 11.5 million under fair value. Now it is IAS 40. So what's the gain here that goes to profit or loss? 500,000. Right. But apart from 500,000, is there something that impacts the profit or loss? Or is B correct? Depreciation. Only after it's classified as IAS 40, there is no depreciation. But before that, 6 months depreciation should be there, right? It was in 6 months, right? 1st January on 30th June. Now, after 6 months, exactly they are changing. That 6 months worth depreciation also will be considered. So what is going to be the depreciation? 10 million divided by 50. That's going to be 200,000. 200,000 into 6 months, 100,000. So 500,000 gain, 100,000 depreciation. So what's the net impact? Net income 400,000. Option A. Does that make sense, guys? Guys online, Azmat, Shenuri, Zainab, does that make sense? Or do you all want me to do the working for every question here?
Are those questions?
Right. Otherwise, if you want, I can even do the working here, but doing the working is not always helpful because doing the working might take some time that we can actually do through discussion. Okay.
Can you share the workings?
Sure. These workings, right? I'll share the entire question paper itself. Right. Okay. Now, 14th question says, Gilbert took out a 7.5 million 10% loan on 1st of January 2026 to build a new warehouse. Okay. What is the standard borrowing cost? IAS 23. So we discussed IAS 16, we discussed IAS 20, we discussed IAS 40. Now we are discussing IAS 23. Right. What does borrowing cost say? You have to capitalize the borrowing cost only of the used during the period of construction. Okay. So in the year in the 30th, build a new warehouse during the year. Construction of the warehouse began on 1st of February 2086. When was the loan taken? On 1st of January. Construction began on 1st of February. Do you capitalize 1st of January for end of January? No, that is going to be expensed. Only from 1st of February, you're going to capitalize that. And was completed on 30th November 2086. How many months did that take? Construction, Feb, March, April, May, June, July, August, September, October, November, 10 months, right? As not all the funds were needed immediately, Gilbert invested 2 million in 4.5% bonds from 1st Jan to 1st of May. Now what happened? What happened now? Now there is a set off, right? To set off and to get benefited with the gain, what does Gilbert do? Invests. So what does borrowing cost say? You will be capitalizing the net within the construction period. Okay, now how does that work? Let's do that question. Let's do that work. Yeah. 7,500 into what's the loan percentage? 10%. What's the interest? 750. That's for 12 months, right? That's for 12 months. This into 10 divided by 12. How much is that? 625. Now coming to the investment. What is the investment? 2 million, right? Not 2 million into 4.5%. This for how many months do you need to take under capitalization? This 1st Jan to 1st May, meaning Jan, Feb, March, April, May month is considered or not? No, they've confused you here. They could have even given you April, end of April, but they gave you 1st May. Why? To confuse you so that you forget to look at the date, you look at the month and you take more months. No, that's what examiners do. So be very careful when you read the question. Jan, Feb, March, April, 4 months was what the investment was about. But out of the 4 months, only 3 months was relevant to us during the construction period. This into 3 divided by 12. So this minus this. What's the answer? Do we have that option here? So here you have to write the answer, which is going to be 602, 500. 90 was 2 million. Now it's yeah, only for 4. No, 2 million for 4.5% annual, right? So if you take for 4 months, we can't take 3 months here. No? Right now, out of this, 1 month you're going to expense and 1 month you're going to recognize as income. 1 year, no? Always when they give interest rates, remember that's for a year. So when you take that interest rate and you do the calculation for a year, then you do the period allocation. Okay, that's very important. Clear? Is that clear? Right. Otherwise, now out of this, if they had asked you what is going to be the income and expense, that's non-capitalization portion, then you know that 1 month of this into 1/12, this needs to be 10 and into 1/12, this needs to be recognized as income. Make sense? Yeah? Sure. All right. So what's the answer? 602, 500. Right. Then we move to the next question. So we're done with IAS 23 as well. Question number 19. ACCA carries out research and development in the year ended 30th June 2085. Now comes IAS 38. ACCA incurred total costs in relation to Project X of 750,000, spending the same amount each month up to 30th April 20x5 when the project was completed. So what's the total cost? Let's do the working here. 19. What's the total cost? 7. In the year in 30th June, ACCA incurred total cost in relation to Project X of 750,000, spending the same amount each month up to 30th April. Right, in the year up to 30th April. So when did the year start? July. July, August, September, October, November, December, January, February, March, April. 10 months. Okay. So this 750,000 is relevant to 10 months. So what was the per month cost? 75,000, right? Now they are saying the project was completed on 30th April 20x5. Project completion on 30th April. The product produced by the project went on sale from 31st May 20x5. The project had been confirmed as feasible on 1st of January 20x5, and the product produced by the project was expected to have a useful life of 5 years. Now what happens here? 75,000, right? Now, how much of that is going to be expensed? 75,000. Wait, now tell me, when did the project, when did they decide the project was feasible? 1st of January, right? When did the project start? July, August, September, October, November, December, 6 months. Not, that's expense. Jan is when it was decided. So Jan, Feb, March, April. Jan, Feb, March, April. That's 4 months of how much? 300,000, right? And this is the value that you're going to capitalize. What is the value you are going to write off? This, or we can even take 750, since we have 750,000 value, 750 minus 300. So this is what you are going to expense, right? But 300,000 you're capitalizing. Now tell me, when are you going to start the depreciation? When will you start the depreciation? Quickly tell me. Who tells? 1st January. Remember, capitalization cost you take when the feasible period, on that day you capitalize. But amortization or depreciation needs to start only once the asset is ready for use or sale. So when did it go for sale? On 31st of May 20x5. How many months? 1 month. 1 month depreciation. How many years is the useful life of the project? 5 years. This divided by 5. This into 1/12. 5. So this minus this. What's the carrying amount? 295,000. Question option A. Clear? Is that clear? Right. Guys online, is that clear? Does that make sense? Quickly confirm. Right, okay. Then comes, so we're done with IAS 38. 21st question. Dempsey Co. owns the pharmaceutical business with a year end of 30th September 20x4. Dempsey Co. commenced the development stage of a new drug on 30th June 20x4, when the drug went into immediate production. The directors became confident of the project's success on 1st of March 20x4. The drug has an estimated lifespan of 5 years, and time apportionment is used by Dempsey where applicable. Again, IAS 38. Now tell me what happens here. How much are you going to, now here they are asking profit or loss for development cost. Now here you have to take the expense component, remember. So what are the components you'll take here? Expense component as well as amortization. These are the 2 elements that are going to impact, right? Now tell me, when are you going to capitalize this? The directors became confident only in March, right? When is the year end? March, April, May, June. Right. When did it complete? June, right? 4 months. 4 months worth cost will be capitalized. How much per month? 40,000. So what's the capitalization? 40,000 into 4 months. When did the commencement happen? Development new drug commenced on January, right? Jan, Feb, 2 months is going to be the expense, right? The expense is going to be 40,000 into 2 months. Right now, 160,000 is 4 months, 40,000 is the capitalization cost. But when do you start the amortization? How many months? So when did the drug go on sale? Complete on 30th June when the drug went into immediate production, meaning 1st July onwards. So July, August, September, 3 months is what we take. So how many years? How many years? 5 years. Out of this 5, we take 3 months related. So what's the total? 80 plus 8, 88,000. We have that option. 21 is D. Is that clear, guys? Clear? Right. All right. Then we move on to IAS 36. Okay, we can't see the options, but let's read the question first, right? A division of an entity has the following balances in its financial statements. There is goodwill, there is plant, there is buildings, there is intangibles, and there is other net assets, right? Following a period of losses, the recoverable amount of the division is deemed to be 4 million. A recent valuation of the building showed that the building has a market value of 2.5 million. The other net assets are at their recoverable amounts. 2.3 million is what the CGU value is, right? The entity uses a cost model for valuing building and plant. Okay. Let's look at the question. Yeah. Question says, to the nearest 1,000, what is the balance on building following the impairment review? What is going to be the building after impairment review? Do you allocate impairment to building? Will you allocate impairment to building? How much? How much will you allocate as impairment to building? Tell me. Two 2.5 divided by? They are saying the value of the building is 2.5 million, but actual cost of the building is 2.3 million. So actual value in the market is higher, right? When does impairment happen? When the recoverable amount is lower than the carrying amount. What's the recoverable amount? Higher of? Higher of? Fair value less cost to sell and value in use, right? So 2.5 million is the market value. 2.3 million is the cost. Do you think that building is impaired? Remember, IAS 36 says you first impair what is impaired. You let what is not impaired at the actual amount. Then you allocate, you remove the goodwill, then you allocate the rest. The building would remain. I mean, building, there is no impairment. But is it going to be 2.3 million, 2.5 million? 2.3. Very good. Why they're saying it uses the cost model for valuing building and plant. Since it's cost model that they're using, the answer is going to be 2.3. A. Okay. Do you want me to do that working where the allocation works, or you all know how to do the allocation? You can do the allocation? Right. Okay. The next question, 26, is the net assets of Feingold, a cash generating unit, are property, plant, and equipment 200,000, allocated goodwill 50,000, product patent 20,000, net current assets at net realizable value 30,000, meaning you don't do any changes to net current assets, but the rest of it needs adjustment. As a result of adverse publicity, Feingold has a recoverable amount of only 200,000. Only 200,000. Out of 200,000 recoverable amount, 300,000 cost of CGU. What is the impairment? 300,000 minus 200,000, right? Carrying amount minus recoverable amount. 100,000 is the impairment loss. Out of 100,000, you have to first allocate to goodwill. 50,000 goes there. What remains? 50,000 remains. Now 50,000, now 30,000, you're not going to do any adjustment there because that remains at 30,000 itself. 220,000 is what you are going to make this adjustment based on. Let's do the working here. Right? Okay. PPE 200. Goodwill 50. Then the patent is going to be, patent is 20. Then they have given net current assets, which is 30, right? Carrying amount, impairment, recoverable amount, right? Okay. Now, out of 100,000, 50,000, you allocate to goodwill. So your goodwill becomes 0. That's what you do first. Here you do nothing because it's a near realizable value itself. This remains 30,000. So what is that remains? 220, right? Now we do the allocation. How do you do the allocation? What's the remainder? 50,000. 50,000 into, first we are looking PPE. PPE allocation is going to be based on 200,000 divided by 220,000, right? The 50, right? Then let's say equals 200 divided by 220, 0.909. So you are allocating impairment. This into, so what is the recoverable amount of the building? 154,545. We have that option A. Then what is the value going to be here? That's going to be this into this. Why is 0? Still I have not done the working. So how would the working be here? Yeah, we can do that also, but let's do it in the usual way itself, right? Let's do it in the correct way so that you don't forget at any point, right? Equals this plus this plus this. 200 recoverable amount matching, right? So if they asked you what would be the value of patent, 15.455. They are asking property, so it's going to be 154,545. Option A. Is that clear? How we all do the CGU allocation? First, you have to let the net realizable value based on market value is higher, not impaired asset, be at their value. Then you eliminate the value of the worthless assets. They'll say this was worthless, so you allocate that, you remove that. Then you remove the entire goodwill, then you allocate. Okay? Right. Yeah, let's do this last question. Then, we were not able to even cover 25. Why you're lazy? Why are you being lazy? Right, let's do this question first. Yeah. Relay acquired a non-current asset on 1st of October 20x9 at a cost of 100,000. Now, next class, if we do this, when are we going to do the past paper discussions? Let's see how I can, because I need to complete these 50 questions, MCQs, because that would help you all understand a lot of theories, okay? Relay acquired a non-current asset on 1st of October 20x9 at a cost of $100,000, which had a useful life of 10 years and a nil residual value. The asset had been correctly depreciated up to 30th September 2024. At that date, the asset was damaged and impairment review was performed. Indicator, right? Indicator. On 30th September 2024, the fair value of the asset less cost to sell was 30,000. And the expected future cash flows were 8,500 per annum for the next 5 years. The current cost of capital is 10%, and a 5-year annuity of $1 per annum at 10% would have present value of 3.79. What amount would be charged to profit or loss for the impairment of the asset? Now, here you are supposed to do the value in use calculation. Here you are supposed to do the net realizable value calculation. Then you are supposed to do the cost, the carrying amount calculation. Then you have to figure out what is higher of both to come at recoverable amount. Then you have to see what is lower of both and arrive at the impairment loss. Good questions, right? So this actually gives us insights into a lot. It is all very much closer to exam questions, right? That's what I'm saying. For MCQs, Kaplan is the best material to practice, right? We have 420 MCQ questions, so that's like a lot of wealth of knowledge. Do it twice, 840 questions. So no one can, fail you, right? Even if they want to, they can't fail. Right. So what happens here? First, we need to understand the cost, right? So what was the cost of the asset? Cost of the asset was, let's say, first carrying amount. So cost of the asset was how much? Cost of the asset was 100,000, right? Now, how many years was it depreciated? How many years? X9, Y0, Y1, Y2, Y3. Entire Y3. So 5 years, right? So how much is that going to be? That 10 years is what they're saying. Into 5 divided by 10. 50,000. So what is the cost? Carrying amount. So rather, this is the carrying amount. This is the accumulated depreciation, right? Okay. Then comes the recoverable amount. So what are two recoverable amounts given here? They have given two components. There is value in use and there is fair value less cost to sell. Fair value less cost to sell, they've given directly. They did not. Okay, so we'll look at how that works. Okay, the fair value less cost to sell, how much is that? 30,000. Value in use is going to be the present value of future usage. So that's going to be 8,500 into annuity factor. How much is that? 3.79. Right, value in use 32. So what's the higher of both? Higher of both is value in use 32,215. So what is the impairment? So this is the recoverable amount. The recoverable amount becomes this higher of both, right? Therefore, impairment is going to be 50, or let's make it in thousands, otherwise we'll have a problem. About 50,000. So impairment loss is this minus this. 17,785. That's what you are going to charge in your statement of profit or loss. Clear how value in use calculation works? IAS 36. How many questions did we do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 questions. Need to do more? Maybe a lot of things, no? So already we have absorbed. We have a lot to absorb yet, right? Okay. All right. So what I'll do is, fine. So today is 3rd. How many classes do we have? 3, 10, 17, 24, and first is going to be only 3 marks. So we have 4 classes. So next week, let's cover the MCQ. 17, 24, let's do the past paper and more. That works? Yeah, because I want to practice more MCQs with you all so that you understand things better. Okay, and don't be lazy. It's not time to be lazy. You all need to spare more and more time to learn. All right. Right. So is it better to come here or online? I would recommend, yeah, whatever you benefit from again, but physical is where you have most of, yeah, interaction, question immediately. It's all that. There's more interaction. All right. So all the best, guys. Follow the 30-day planner. Shall I share the 30-day planner right now with you all? Yeah. So I'll just share the study plan. It's not in PDF, Shanuri. It is in Excel. We can mark it. Yeah, exactly. That's what I've done in Excel. So YouTube audience, I'm not sure how I can share study planner with you all, but I hope you all will be able to refer through the YouTube, the videos, and just create, maybe open an Excel and just whatever you all saw on the screen, just imitate that and create an Excel file. So the live class students, I'll be sharing it on the group. Okay. So Azmat, I'll be giving out the mock marks by hopefully by Wednesday, because two of the guys have just half done it. So they are yet to complete and provide me. Once I provide, I'll be able to give you all the marks, because I'll be submitting the marks by Monday. By Wednesday, I should be able to provide to all of you. Right. So Umar, please share your answers by Monday. Okay. Don't be lazy. Shanuri, please share your answers by Monday. Yeah, Monday's tomorrow. If tomorrow you're starting a study plan, you won't have time. Okay, I need to submit the marks by end of the day tomorrow. Go, I mean, today you have time on the way while you're going to your hometown. Just have a look at it. Right. All right, guys. So all the best with the FR. Okay, fine. Can give you that allowance. Right. So all the best. Prepare well. Look at all the elements that we discussed. Study harder and target to gain at least 75 marks. 50 marks is very basic. Anyone can do that. 50 marks is very easy, right? The target 75 marks and join the groups of extraordinary. All right. So I'll see you all on next Sunday. Until then, stay safe, take care, have a great week ahead.